Oh my God, we are live. Can you guys hear me okay? Just so that you guys know, this is my first live stream, so I don't exactly know what I'm doing. So you gotta bear with me. Can you give me a thumbs up in the live chat if you guys can hear me okay? I'm just gonna check YouTube as well. So while I am about to set up and ready to go, what I'm going to be doing today is I want to go over some just a few market updates, and then I want to share some thoughts around whether the correction is over, and then throughout, like, I will answer some of your questions. You guys put a lot of questions in one of my posts last week, so there's quite a few questions I need to answer. But in the meantime, if you guys have any questions, just throw in the chat, and then I'll try and answer as I go. Right? Syphlix asks, melt up or melt down this year? Probably both. Who knows? Okay, so let's get started. I'll probably live stream for about half an hour to about 40 minutes, depending on how many questions you guys have, and then we'll go from there. Right? I have dual screens, so I think one of the first things I want to cover is that over the week, last night, as many of you know, the market has rebounded, which is, well, at least the NASDAQ has rebounded, which is really good to hear, right? Because there's been quite a few red days, and that's absolutely fine. But the broader picture is that if you look at the graph on a longer time horizon, the recovery was such a small blip, if you will. It's been about a 10% decline, ever since like early Feb, and it now recovered just a little bit over 4%. So it's nice to see. And one of the things that I talk a lot about, especially in Discord, is that there's a general sentiment that people keep saying that all tech is overvalued. And I feel like that's a very intellectually convenient statement to make, right? Because not all tech is overvalued. It's just some tech are extremely overvalued. And whether, how you define overvalue is really up to you. But yesterday, a few of the big tech names did recover. This is the one-day performance. This is FinWiz, by the way. So I'll link this in chat if you guys want to use this for yourself. But if we look at a 1 month time horizon, majority of the stuff is still down. So, take the recovery for what that's worth, right? In terms of ASX, there wasn't really that much movement. Honestly, it was pretty quiet, and that's good and bad. And frankly speaking, my portfolio, my foundation is built on Australian stuff. So it's pretty, I'm happy that I started off with Australian stuff. And even though the market did correct from Feb, from the end of January to Feb, it didn't really impact me that much, just because I had a very strong foundation, right? What really surprised me actually is crypto. Well, not crypto, just I'm only looking at Bitcoin, and Bitcoin actually held up really well, especially for me. Like, as many of you know, especially if you're part of my Patreon, I talked about, adjusting my portfolio for inflation reasons, and, central banks printing too much money. I needed an alternate asset that's not correlated with the stock market. So, I went with Bitcoin. And the good thing is I actually bought in 11,000. So my average price is about 11. I think I might have got lucky on this one. Who knows? But it's been, honestly, it's been pretty good to me. So I just have a few points I want to go through as well. Other than that, there was a lot of questions around whether the correction are going to end. And frankly speaking, if we look at the yields, and I'll explain how the yields actually impact valuation in just a second, so bear with me. So if we look at the yields, some people have problems with trading economics. I don't. So if we look at a longer time horizon at 10 years, towards the end of towards the beginning of the pandemic, it was the yield, the 10-year treasury was about close to 2%, if not 1.8-ish. We still have quite a lot of room to move up. Even though in my Discord, in my Patreon, we've been talking a lot about how the Japanese could potentially come in and actually swoop in and buy a lot of the bonds. But I won't speculate too much there. It's just something that we've been paying a little bit of attention to. So I personally speaking, I wouldn't get too, I'm not getting too comfortable with the whole, the correction is over. I just think that, it's one green day, so I'm pretty cautious. I'm storing up capital and I'm just going to keep investing in companies where I think they're going to worth a lot more down the track at a reasonable price. Valuation at the end of the day do matter. So I'm paying a lot more attention with my quantitative work and make sure that I don't get too complacent when it comes to paying too much for something. And then the one more thing I'll cover, and then I'll go through some of the questions. Quite a few people have been talking about PayPal entering into Australia, especially for buy now, pay later. And frankly speaking, I know we talk about this a lot, especially in my community. I think media has made things very polarizing, which is like, if PayPal launches something, it's going to kill, it's basically going to destroy all the buy now, pay later companies. And I don't think that is the case, especially with fintech. I think with financial services, the market is so big that it can fit multiple players. So I wouldn't think that just because PayPal is launching buy now, pay later is going to absolutely destroy Afterpay and Zip. I think it might slow them down, but I think there's more than enough room to cater for multiple people. But in saying that, I don't think some of the smaller, so what I'm trying to say is that over the long term, I think that there will be consolidation with the smaller players, because in a business model where buy now, pay later is kind of like a double-sided marketplace, actually is a triple-sided marketplace, but I'm not going to expand on that. I wouldn't say that's not a threat. I think they will be a threat, but they'll slow down everyone. Like they'll slow down Afterpay and Zip, if that makes sense. But the thing is, if you look at Zip and Afterpay's growth charts, especially with customers, they're plateauing in ANZ. So, but they're growing exponentially in US. So there's kind of that conversation of like, how big is it really going to impact, Zip and Afterpay? I just think, look, someone's got to give Zip and Afterpay a run for their money, right? Like, don't make it too easy on them. Thank you. A few of you have are long-term subscribers. I appreciate that a lot. It means a lot to me. I am a little nervous. That's why I'm stuttering. But yeah, as I get warm up to it, I think I'll be okay. Okay, so PayPal. Spoke about PayPal already. Let me talk a little bit about some of the questions that you guys sent me on one of the posts. I think it'll be good. So one of the question was, can you please explain why inflation has a downward effect on buy now, pay later? So this question is actually really interesting. And I think the terminology is a little bit mixed up here. Inflation itself might actually help buy now, pay later, because the whole idea of inflation is that price of goods and services will go up, right? So, from a buy now, pay later perspective, if people are, borrowing more to buy stuff, that's actually pretty good for buy now, pay later. But if we dig a little deeper into that question, it's not inflation that has a downward effect on buy now, pay later, but it's interest rate. So let me explain. So for those of you who are doing discounted cash flow models, for not that many people is doing discounted cash flow models for valuation, right? But here, in finance, that's what a company is meant to be worth. It's a sum of all of the future cash flows. And then this denominator right here is the discount rate. And within this discount rate, it takes into account interest rates. So if interest rate in the future cash flows go up, and instead of being worth 186 being the terminal value, then it'll be worth like 140 something. So as interest rates go up, it actually hurts. It actually hurt these companies that's not generating cash flow. And the ultimate sum of all of these future cash flows will be worth less. So that's why when when you're thinking about, okay, is inflation impacting these buy now, pay later companies? I think a better question to ask is, well, is interest rate impacting these buy now pay later companies? And I think yes, because ultimately the interest rate has a downward pressure on the discount rate into the future. Well, it increases the discount rate in the future, right? So this whole value will be worth less. So I just think the terminology is a bit mixed up there. I think it's discount rate that has a downward pressure on buy now pay later, not inflation. But inflation, ultimately do play a part as well. And then another question is, can you explain what is behind a correction? So generally, we don't move the market as much as as much as we want to think how baller we are, with a 6 or 7 figure portfolio. We don't really move the market. We're like a small fish in a very big pond. Who actually move the market is pension funds, insurance companies, hedge funds, basically people who can write very big checks. And these are the people that they need to move money around to make sure that they're generating a return for their clients. So when the macro environment moves, it's their duty to actually move money around from different asset classes. So asset classes could be currencies. Currencies, it could be an asset class. Bonds is another asset class. Equities is another asset class. So when the US stocks, especially the high-flying growth names, are running really hot at really high valuation, and then the yield started to creep up, it was in a lot of fund managers' fiduciary duty to move money to protect the gains that they've made. So I wouldn't say that's what caused a correction. I would say that a very large contributing factor to the correction. So I think I answered that question. Let me look at some comments. Let's see what kind of questions you guys have. Give me a second. Thank you guys for giving me tons of support. It means a lot to me. So let me just answer some questions. I'll go from top to bottom, okay? So Daniel asks, are you in any GME on the side? No, nope. Yeah, I need to sleep at night. So yeah, no. Let's see who else. So do I plan on topping up VHT? I think moving forward, I have so much growth. Like I have such high conviction names in my growth portfolio. So I might be looking at a little bit more towards companies with strong cash flows. So to answer your question, I'm not looking at that for now. Do I have any thoughts on DSX? Do I have any thoughts on retail sector, etc.? No, not really. I mean, if we're talking about like e-commerce, then I might have some observations, but I need to do a little bit more digging. Like I wouldn't feel comfortable just like blurting out a bunch of stuff. You guys gave me thumbs up. Thank you. I appreciate it. PayPal is no threat. Yeah, I wouldn't say that they're no threat, but they definitely will slow people down and give Afterpay and Zip a run for their money. Appreciate you too, Des. Thank you, Thomas. I appreciate you guys. You're doing really well. Thank you, Will. Thank you, Jessica. Let's see what else. How much do you think Talga will be in the later half of the year? When it comes to price, I don't know. Like that's the thing. I'm not an oracle. I don't give I try not to do price targets because I'm like, how do you know? Like, I mean, I know I have an estimate of what the company might be worth like 5 years down the track. Like, I just wouldn't know what will happen in later half of the year. As crazy as it sounds, we talk a lot in our Discord community where if the Japanese do actually end up buying the US bonds and actually drive the yield lower, there actually might be a probability that is for the growth stocks to rally. So that's a very interesting observation to dig a little deeper. So don't know. Let me remove this banner. Let me look at some more comments. Any thoughts about Afterpay and Zip now that PayPal is coming to town? I actually just answered that. I think that PayPal is a worthy foe. I wouldn't like. It's not like, in my opinion, it's not a winner take all market. I think the market is big enough for multiple players, and PayPal coming to town, honestly, PayPal is one of the companies that they have to follow suit. If they don't pull moves, they're not really growing. It's kind of like if you look at Square's track record, they go into Cash App and then they go into Bitcoin. And then if you look at the timeline, as soon as Square got into Bitcoin, guess who else got into Bitcoin? PayPal. So I think the startup DNA in Zip and Afterpay will really give these like incumbents a really good run for their money. So I wouldn't think they're. I think they will slow them down and they will give them a really good run for their money on PayPal. What's your thoughts on FMG and VUL? Iron ore, that's not my commodity. Someone in my Discord channel are like very into commodities. That's just not something I'm into. Well, I'm only into a selected few commodities. Like lithium will be something that I'm quite interested in. So on your questions about VUL, a part of my biggest concern that I never pull the trigger on VUL is that from my understanding, I don't know whether if it's actually feasible to pull off direct lithium extraction so quickly. That was one of the main reasons why I never pulled the trigger. And part of it is it's just because I don't understand the technology as well as I did as well as I do with, for example, Talga, etc. I just had a lot more understanding there. I felt a lot more comfortable pulling the trigger with those. So looking at Vulcan now, obviously they have a lot of support and there's been a pretty big correction on VUL. But if you watch my lithium video on renewables, renewable stocks ASX, I actually talked about the criteria why they're a strategic asset for Europe. They just take a lot of boxes, which is fantastic. But again, we're in this era where valuation matters a little bit more. So then I have to ask the question whether, am I going to shoot myself in the foot for, looking at a company that's not going to generate revenue for a long time? Talga is probably going to generate some cash flows, this year. So we'll see about that. Can you explain how to measure margin of safety? I'll probably save that for a proper video. I wouldn't be able to just kind of describe it. Thank you, Steven. I appreciate it. Zip did not rebound like Afterpay. Any thoughts on UBS upgrade? With the analyst upgrades, I kind of always just take them with a grain of salt. I think UBS gave Tesla some stupid, price target for a long time. And yeah, I just always take it with a grain of salt. And the problem is that, like, when you're such a big bulge bracket bank and you put price target on things, some people don't even do their due diligence. So they kind of just believe what they say. I'm on the opposite end. Whatever they say, I tend to like ask more questions because, are they, is Zip, if they have any investment banking relationship, they might pull the share price down a little bit more to force them to go for a raise. There's so many different dynamics that happen in the investment banking world. So I wouldn't really, I always take these targets with a massive grain of salt, and I do my own due diligence. I just don't even, I look at it and I'm like, okay, cool, and I move on. Do I have any interest in crypto like Ethereum? Yes, I do, but more mainly in Bitcoin right now, because I feel like, yeah, I personally believe that I can't learn deeply about everything. So I think Bitcoin is kind of like my main focus of learning at the moment. I do understand the whole idea of smart contracts. When it comes to Ethereum, what's really interesting is that Kingwood Mallisons, I think they're one of the leading top law firms that's really looking at smart contracts. Whether they're using Ethereum or not, I don't know, but they do have an innovation lab that's focusing on blockchain tech. And I think similarly for CBA and also ASX, they've been working on this for like years. So that's something that I'm just paying attention to, but I don't know a lot. I am interested, but I'm only interested in the bigger cryptos, like for example Bitcoin and Ethereum. Everything else is like, that's a distraction for me. Let's see. Thoughts on ROU Pay? Don't know anything about ROU Pay. It's a much smaller player. I realize that I've been pulling up a lot of DJ's questions. Let me pull up something else. Oh, you guys have threw a lot of questions. Sorry. Give me a sec. Yeah, definitely smash the like button. I appreciate it. Have you had a chance to look at Nuke's largest IPO last year? I did make a video on Nukes, and I think the whole idea is interesting. It's very similar to Palantir, and I don't have any observations beyond that because when I looked at it, when I did my video on it, if you just go to my channel and look for a Nukes video, I think this is probably one of the higher quality IPOs last year. There were just so many IPOs last year that I thought it was outright trash. Yeah. So not too many observations beyond. They have a very interesting model. The team is very strong. But beyond that, I don't understand the industry enough to make any proper observations. There were some questions about, have I topped up on Talga? Actually, I did. I bought in. I actually added Talga when they offered the share purchase plan. So does that count? That probably doesn't count as part of the correction. But yeah, I did top up like a while back. But to answer your question about like more around what to do during these corrections, what I found that's really helpful for me is that don't do anything. Like sometimes when things are happening, I tend to take the time to reflect on my decision-making process. Like, what are some of the high-quality decisions I made? What are some of the poor decisions I made? Like, for example, I talked a lot about reflecting on my complacency when it comes to HIMS. I love the company a lot, and I still hold them. I've actually added more on the way down, but I think I got complacent on valuations, and I think it's just when things are in chaos, I like to take the time to reflect. And I spend a lot of time reflecting anyway, but these are more important times that I don't do anything stupid, or I need to focus on not making decisions, in a split second. So I think if I can have a few high quality decisions, like for example, adding to Disney was a pretty high quality decision in my opinion. I think I'll do just fine in these environments. Favorite crypto, and are you in on the long run? Yes, absolutely. I'm always in for the long run. If I was a hedge fund, I'll probably go long. I would not go short. And my time horizon is between 5 to 10 years. Favorite crypto, I think I mentioned this before. Bitcoin and Ethereum is more so towards Bitcoin at the moment. So because I know less about Ethereum, but I'm more interested to hear and listen to the founder of Ethereum, like the way he thinks about how he built how he constructed the whole idea behind Ethereum. That was interesting. So I'm still learning about Ethereum. I just don't know enough about it. I'm more thinking a lot about Bitcoin at the moment. What are your thoughts on equity research and what of big companies, especially, why do big companies listen to some of their ludicrous valuations despite? You got to give me an example of a big company listening to the valuation. But when it comes to equity research, I do my own, and I think I'll read it and then I digest it, and then I think about the company's track record, like whoever that's doing the equity research. But I also like to mix in a lot of my own opinions. Like, for example, my professional background is very much in the startups and in digital stuff. And what's really interesting to me is that sometimes when I look at equity research, especially for e-commerce companies, no one talks about SEO. And for me, that is by far one of the biggest moats about really strong e-commerce companies, because SEO is not something that you can like outrank someone overnight. It takes years, especially if the team is really good. That is 100% an economic moat. So I take the equity research with a massive grain of salt. And yeah, I like to do my own research. I like to be a nerd. So yeah. Will Bob's be the next ATM? I don't know. I've done so there was a lot of questions about, how come, David, how come you're doing videos about these companies, but you don't invest in them? A good example is like Bob's and Zip and etc. I think for me, a lot of these companies, even though I don't invest in them, they are great case studies to learn from, because it teaches us a lot about how they're executing against their plans and what went wrong and how did they adjust. And I feel like I've been able to learn a lot from the whole Bob story and A2M story, where we actually talked about ATM in some of my Q&As for the Patreons. And I think for me, ATM has such a massive cash war chest. And my idea at the time when I was doing the Q&A was, okay, maybe this is the time to deploy that capital and follow what Bob's is doing with the surrounding countries around China. Because if you think about other countries that are growing in GDP, like for example, Vietnam, and some of the other surrounding Asian countries, they might be able to replicate that kind of success. Is going into US a good strategy? I don't know. But I've been 2 years ago, I went to Vietnam for a holiday, and I was surprised the amount of Chinese influence within the country. And I think the reason why I brought up, deploying capital to surrounding Asian countries is because there is a lot of Chinese influence around those kind of areas, which they don't have to reintroduce themselves as a brand new product, right? So to answer your question, will Bob's be the next A2M? I think that you can never say yes or no, but the probability wise, I will put it as a low probability right now. It depends on how they, execute. They've launched, vitamin stuff with an influencer. I don't remember her name. But as it stands, we just gotta observe. We don't know. Who knows, right? Like maybe the economy reopens and suddenly they do really well. Who knows? Thoughts on Kogan? Reckon it hits bottom. I don't know what the price is. So Kogan. That does not look like bottom. But I think the whole idea with Kogan is that you have to ask yourself, do they have an SEO advantage over some of the other e-commerce companies? Do their customers love coming back? Because if their customers don't love coming back, that's a problem, right? So for me, I don't have too many observations. I probably should make a follow-up video on Kogan and JB Hi-Fi, because those are very, very interesting stories. But for now, I don't have any proper educated observations to share with you. Have you looked into blockchain's emerging tech and its capabilities? I have, but I think I need to dedicate more time towards the tech, because if you ask me to describe blockchain to you in a single sentence, I wouldn't be able to. And yeah. Is there any benefits in using stake over CMC for US shares? For me, like stake has I think the whole brokerage free, and also a big part of my portfolio is on stake. And the lack of transaction fees between trades, I just like stake. That to me is a personal preference. But there is a downside to stake where some of the early stage companies that sometimes I want to look at, that I want to go in for, it's just not available on stake. And sometimes that's a bit of a bummer, and I use CMC to make up for that. But majority of the time, I spend most of my time on stake. Oh, and I also forgot to do my compliance stuff. No, this video is not financial advice or recommendation for you to do anything. It's just general information for entertainment purposes. Okay. So gotta tick the compliance box to keep doing YouTube videos for you guys. Let's see what other questions are there. Thoughts on massive inflation hitting the US and how much will it impact us? Well, I think for some of us, I think it will be very unwise if we don't believe there is inflation. And there was actually a question that was thrown in one of the posts about Michael Burry having a tweet storm around hyperinflation. And I think the thing for me is inflation is actually a very complex topic. It's not just the CPI. There is, I mean, if you look at asset inflation, like for example, the stock market, that was like hyper inflation, right? If you look at train tickets, I think it was like 6-7 years ago, it cost me $2 to go from where I live into the city. Now it costs me $10. So inflation definitely exists. Now, inflation hitting the US, like I think what Matt is referring to is the massive stimulus bill and the amount of money that's flooding into US. I just don't think I'm educated to make any proper observations, but I do think that if there is so much money running in the economy, it's going to have some form of inflation, right? We might not, CPI is a lagging indicator. The way it's measured, I'm not even going to go into that, but I think we won't notice it. And by the time we notice it, it might be a bit too late. So how much would it impact us? That's a really tough economic question. I don't have an answer to that. I'm sorry. So that's probably a question that I have to study a bit more about. You guys have been really generous with questions. Thank you so much. So there's a few more questions I want to get through. And I just lost my spot. Do you think the market correction is over? I actually answered this earlier in the stream. No, I don't think it's over. I think it's like one green day, and the Nasdaq is down like 8 or 9%. I would feel more comfortable thinking that the market correction is not over. So that will help me sleep at night. And so it just really depends on how you want to think about the situation. I personally don't think it's over. And I think, treasury yields could go up further. And, with inflation, there's a chance that the Federal Reserve might have to increase interest rates, even though that they have said that they don't want to. But that's a very tough question that I need to dedicate more time to think about a bit more. But in short, no, I personally don't think it's over. BTC is the king. Sure, I have a portion of my portfolio dedicated for that. What are some good sectors to invest in for a 10 to 20 year horizon? I think that's a question for your worldview. Like for me personally, I talked a lot about clean energy. I talked a lot about battery tech. And that's what I think those are good sectors that will have strong tailwinds moving forward into the future. That's more of a question for yourself. And I mean, clean energy is inevitable, and cybersecurity. I actually just linked an article from Bloomberg into the Discord today, where it's just getting more and more serious that companies are going to invest a lot more in cybersec. If they haven't, they should be panicking by now. And I have a good friend who works in CrowdStrike, and I talked to him about stuff like this, and he helps me understand the landscape a little bit better. So maybe when I have a bit more insights, I can share more about that. But definitely, I think cybersec is if enterprises are not thinking about that after all of the news, they'll be probably thinking about that by now. Clean energy, 100%. Let's see what else is there. Where can we find out about open short positions on a particular company? I don't know whether you can find open short positions on a particular company, but one of the companies that one of the websites I do use for stuff like this is I'm not affiliated with the website, of course, but I use shortman.com.au. This is pretty helpful for me to get a gauge on who's being shorted. I actually made a video on this where, so I made a video on this. I forgot which one it was, but I talked a little bit about sourcing ideas from, is it here? No, here, this one right here, the most shorted ASX stocks, which ones are misunderstood. Like for that video, I actually go through my process that if a company is being shorted and some of the insiders are buying, those are contrarian signals that, it obviously doesn't make sense. So yeah, so I use that website for this. 250K US at least by November. What do you mean by that, Matt? How can I diversify a small portfolio? I'm only 17 and still at school and don't have a lot of cash. Actually not qualified to give financial advice, so it's important that you go see a financial advisor about that. But I think for me, looking back into my younger, but when I was 17, I think one of the fundamental things that I think I was missing is learn how to save money, learn how to invest money, and learn how to make money. Most importantly, learn how to save and make money first. Because the whole idea of investing is to put your capital to work so that it can grow much faster, right? But if you don't even know how to make money, that's a missing ingredient. Because if you don't know how to make money and you're investing everything that you have, like if you don't know how to, like if I'm trying to be really careful about this because of compliance. But yeah, I think the main thing for me is learn how to save money, learn how to invest money, and learn how to make money. But make money and save money is like #1 priority for me if I had to look back. Oh, that's a hilarious question. Thoughts on AMC? No thoughts. Haven't dug into it. Don't know. Thoughts on Talga Resources, DFS due? Yeah, don't care about short-term fluctuations. I'm such a long-term guy, and yeah. You still bullish on Volpara? Yeah, I still hold it. I just indifferent. I short-term fluctuations. I don't care. Wow, you guys have gotten so many questions. Thank you. I appreciate that. I'm really just trying to go through all of it. Hey, mate. Got in early on Novonics. Any more updates on them? Probably down the track when there's a little bit more to talk about. Right now, there's just not a lot to talk about. You got to give, like sometimes stocks doesn't just go up green and to the right forever. You got to give them time to execute, right? Like you got to give them time to go do some work. And not always chatting and doing press conferences and stuff like that. Let them do their thing. I like your video on Airtasker. I've been watching them. What's your opinion on high pages? My opinion on high pages is actually in Airtasker. I think for me, when it comes to a double-sided marketplace, scaling horizontally, for some reason, it just doesn't fly with me because I think your competitive advantage, it all comes down to how you can add value to the people in the marketplace. And being able to verticalize, which is like something that high pages have done, you can serve your contract, like the tradies, your customers just so much better. But for me, obviously I'm still a very young investor, right? So just take my comments with a grain of salt. But personally speaking, I prefer a vertical marketplace instead of a horizontal marketplace. Hims looks tasty, blah, blah, blah. I've been doing a lot of, like, I'm personally in Hims. So yeah, who knows? I'll probably, yeah. Oh, wow, you guys have just put a lot of questions. What do you think about Tyro growing and competing? Obviously, system errors, blah, blah, blah. But growth looks good when compared to pre-COVID price. I actually talked about Tyro briefly in the most shorter ASX stocks video. I think it's a bit overblown about the whole situation. Yeah, but like you also have to think about the situation as well. The short seller came out, just screaming and yelling about like how broken this company is. But if you look at the news, go on AFR and actually Google Tyro, you realize that as the share price went down the drains, who was buying is that Mike Cannon-Brookes, which is the original, like the CEO of Atlassian. Their family office actually went in with an undisclosed amount to top up. So sometimes when these shorts report come out, you have to just take everything with a grain of salt and ask, am I wrong? Like, how are they right? Yeah, so you just gotta ask a ton of questions. What's your thoughts? I already talked about this earlier in the stream, so just rewind back a little bit. Let me look at what do I think about cybersecurity stocks like Fireeye and CrowdStrike, which are almost military contractors at this point. Yeah, so this is the thing about CyberSec that I can see, obviously this is a very promising industry. And again, I've actually talked about it pretty extensively early in the stream that, if enterprises are not thinking about CyberSec, they'll definitely be thinking about this after the whole Fireeye saga, right? Oh, sorry, the SolarWinds saga. But for me, given the environment we're in right now, we have to be like, I'm very careful about valuation. And yeah, it's just, it's a bit pricey for me at the moment. In companies that you own, like Novonix and Talga, that aren't generating cash flow, how do you decide a fair value? That's a really good question. I haven't been able to put a precise value to it. I've more kind of roughly guesstimated, based on the amount of. So for Talga, it's a bit easier because they have a mine. You can kind of decide. You can kind of calculate what that mine is worth, and also given the the tailwinds moving forward into the future, you can kind of guess, have an educated guess on what will happen. With Novonix, it's a bit harder because they're kind of scaling up production, right? So I don't have a good question. Sorry, I don't have a good answer to that. Yeah, I actually just do not have a good answer to that just yet. Have you seen going back to commodities? Do you have any thoughts about PLL and the relationship with Tesla? PLL is Piedmont Lithium, right? I don't have too many observations about that. They're in the right place, right time, and Tesla is a very hungry company for lithium. So someone said, second James's question. Yeah, so on the fair value, question on Novonix and Talga, I might make a video on that just to kind of make it a bit easier, but I don't have a good observation on that at the moment. What is your Discord? It's purely just for Patreons at the moment. It's probably in the description somewhere. The only reason why I've gated that now is just because in the past I've actually opened it for public and the conversation quality was so low that I just decided to restart. So yeah, I only dedicate that for the Patreons for now. David, I'm interested in data centers as more and more data storage is needed. Do you have any? Well, that's a good observation, right? So then, like, if you're interested in data centers, then what else do you know about like data centers? And I think I made a video on NextDC a while back, and I had a very interesting thought. I think they might have implemented that already, where if you look at the electricity prices, because like data centers eat up electricity like no tomorrow. If you look at the different electricity prices throughout the day, there is peaks and troughs. So part of the idea in the NextDC video is, what if NextDC implemented a level of lithium batteries? Because if we talked about this conversation, like we had this conversation a few years back, the economics behind batteries just doesn't make sense, but now it does. So then what you can do is you will buy electricity at troughs of the electricity prices, and then you discharge your batteries at the peak of those costs. So then that you can shave off some of the massive peak and troughs. You're basically flattening out the electricity price curve a little bit more. Don't have any observations around that, but yes, I'm interested in that as well. But that's, yeah, not too many observations around that. Do I still do dividend investing? Yes. Basically, a big part of my portfolio is still dedicated for dividend investing. Is my focus around dividends? Not at the moment. I think I've talked about this in some of my older videos where I do believe that in March I was given a chance. Right? Not a lot of people know about this, and I feel fine talking about this now. So when March happened, what I ended up doing is I looked through all of my inventory, like what I owned and what I don't need, right? And I actually ended up selling my car, a lot of different assets I have, and liquidated them to invest. That's how extreme I was. The way I thought about the car is that it's a depreciating asset, wasn't generating cash flow, and it was high on the expenses side. So yeah, didn't make sense. But I still have a big portion of my portfolio in dividend investing. Let's see what else is there. I'll do an extra 15 minutes because you guys have so many questions. And thank you if you're joining. I really appreciate you guys a lot. A few of you guys actually came up to say hello to me in real life as well. I am a little bit shy in real life, so bear with me. I'm trying to get this is how do I think about this rebound? I'm indifferent. The way I thought about this is that I'm just thinking that it's a short-term thing. And I on the back of my mind, I'm just telling myself that hey, this is the correction is not over yet. Yeah, just so that I manage my own expectations. What are so kind of observations around travel? The way I thought about travel is that in the short term, it's not going to be international, so it's more going to be short distance. But I remember Kenjo talking about this, where some of the valuation for like Flight Center or Webjet was so high that they weren't even making any money. So for me, it's kind of like that makes no sense. So I'm not, even though we're in an environment where the environment values cash flow companies, I'm not going to just jump into suddenly going into like travel companies without actually properly thinking about it. So not too many observation at the moment, but more around short distance travel. And also very dependent on the vaccine rollout, right? A lot of foreign interest in Vietnam every time. Yeah, absolutely. I was there about 2 years ago. Yeah, a lot. It was just so alive. What is your competitive advantage in terms of being a great investor and YouTuber, speaking relatively to smaller who started relatively the same time as you? Well, firstly, I don't think I'm a great investor. I think I'm a work in progress. That's really important distinction to make. And I don't think of myself as a YouTuber. Also, I just think of myself as a content creator, sharing my thoughts when it comes to how I think through things. And by me, like I treat YouTube more like it's almost like a decision-making journal for me, where, okay, so I went down this particular path and I share my portfolio so publicly, just so that I can actually document why I made that particular move. Because if I do that, then it gives me a chance to reflect on the decision I made and not just like I have to think twice, and that's important to me. In terms of advantage, I think my advantage is probably my experience. And I don't know, the way I think about this is that how can I be the best version of myself? How can I be just a little bit better than the person I was yesterday? So yeah, like I don't think about my advantage compared to other people. I think about my advantage compared to myself. So other than that, I really don't have that many things to say. I think the other thing that we also have to pay tributes to is for anyone who's kind of creating videos, smaller YouTubers or whatever the case might be, you got to give them shout outs, right? Because it's really hard being a content creator, and I understand the pain, obviously. So we got to give them the support. It's just really hard to put yourself out there for people to judge. Like I remember seeing comments in different places about saying how the videos I make are really easy. Anyone can make it. And it did not a lot of unique insights. Did it hurt me? Yes, it did. And that's part of being a content creator, that you're just throwing yourself out there for everyone to judge. And it sucks sometimes. So it's not that glamorous. Yeah, sorry, that's a long rant. But I just think of myself as a work in progress and how to improve myself. I don't really think about what is my advantage over others. Okay. So love your work. Can you tell us your thought on the Discord community? What were your expectations? Oh, so that was interesting. So when I first started my Discord, I was thinking that we would have a lot more educated conversations, but it didn't. When I opened it to the public, it was just the quality of the conversation was pretty poor. A lot of rockets. People just kind of like asking what they think, like what I think about a particular company, so on and so forth, with no foundational research. So that's kind of, yeah, I'm not keen for those kind of conversations. I more prefer really thoughtful thesis that you already built, and then you're putting your thoughts out there for someone to kind of improve on it. And at least for now, we have product managers, nurse managers, just people from different insights, engineers. That's not an echo chamber. I think that was really important to me, that the community that I had wasn't an echo chamber, that whatever I said, it was right. So I'm very grateful for everyone that's watching the live stream at the moment, and people in my Discord community, that you guys being very supportive and very constructive. Sometimes I will miss something in Zip and you guys will correct me and help me understand. That means a lot to me. And I much prefer that than, yeah, I much prefer that. Let's see, what else is there? Thank you thank you guys for joining. There was questions about my deal. Maybe I'll add that together with Kogan, because kind of a similar company. Not really, but yeah, but more of an e-commerce twist to it. For the new investors in the game, sentiment open. No, I don't think so. I think there's always an element of speculation and sentiment. Yes, I mean there is an element that, because retail trading is so accessible, that everyone's kind of piling in on different things, and Reddit has really changed. I think in my opinion, this is the era of crowdsourcing research, and the era of retail traders or retail investors really have an edge compared to some of the institutional investors. But to answer your question, is sentiment overtaking fundamental DCF? No, I think fundamental DCF ultimately do come out on top, but you just don't know how long it takes for that to come out on top. And especially in these kind of environments where yield is going up, people are a lot more sensitive about valuation. This is a really good time to flex, your research. Because if you haven't done your research, that's why people are asking for opinions, right? It's like, oh, what do you think about different things? It's because your foundational understanding of a company is just not solid. So when prices move, you get scared, you get paper hand, right? But if you've done your work, you shouldn't be scared. You already know what it might be worth, down the track. So it's all about. To me, I'm a nerd. I love to learn. So yeah, I love to do research. 3D metal. Don't know enough about it. Sorry. Were you ever in a phase where you try to make it big on microcap? No, that was always too risky for me. And also there's a compliance side as well, where I never got into it. Do you think it's best to go to a professional? Yes, always. It's always best to get professional opinions. And I'm always nervous. I'm nervous talking to you guys. I'm nervous going to a professional. But I think they're there for a reason. And I think I have an accountant that I work with for all my taxes, and she makes me feel really safe. She makes me feel assured. She makes me when I spend time with her, like it's important. I know that at least on tax side of things, I'm taken care of, and that's important. We're definitely a lot of conversation here as well. That's awesome. High quality rockets. Where do you draw the line? That's up to you. That's not up to me. For me, I mean, I have wax, and my management fees on that is like 1%. So it's a question of like, what are you willing to pay for great management? And for me, is like, I'm willing to pay that fee. So yeah. Thank you, Danny. Thank you, Tom. You guys being awesome. Costa, do you miss the voice? Yeah, I probably do miss the boys. Am I still interested in battery supply chain? Yes, absolutely. It's one of those things that you have to buy the materials down the track, right? You can't really skip it. So, no matter how, how volatile the environment is, you got to get the materials. So, so yes, I'm still very, very excited about that. A couple minutes left. If you guys only have a couple minutes left, so there's still so many questions. I might do a follow up on live stream. Like if you guys are keen for that, just make sure you gently smash the like button, and then I might make this a weekly thing if you guys are interested in something like that. Wow, there's a lot of questions about Appen. Let me just try and so the thing about Appen is that again, it depends on your understanding of the company. It always does. And when it comes to Appen, I think I've spoke about it enough in the video. So I actually did make a video on this only not too long ago. It was somewhere around here. Just just search for it. It should be here. The only reason why I'm not keen, I'm personally not keen on Appen is just I don't like the business. Like it's just not interesting to me. It's kind of boring. Hey Brenda, what is your opinion on Abby? Is Abby Adore Beauty? Yeah, probably is. So I made a video on Adore Beauty as well. So just go to my channel and search for it. Beyond the research I've done for that video, I actually don't know much about Abby. I actually spoke to one of the analysts who's really interested in Abby, and I think the thing I think what's really interesting about Adore Beauty is that you think about the things that they've done digitally, and it's really hard to replicate. Like with the whole podcast thing, tell me another e-commerce company that being able to build a podcast that popular, when it comes to beauty and stuff. That's probably a handful, right? The YouTube channel, is going strong as well. And yeah, I mean, if they can nail their YouTube channel along with the podcast, oh my God. Like I actually talked about this in that Coles video for the earnings video as well. And for Coles, part of what really frustrates me is that they do all these videos, but they don't link it back to the product page to allow you to buy it. It's like, what's the point? Like, yeah. Hi, Joe. Thank you. Yeah, you're way too kind. You're gonna make me blush. So I'm so grateful. We have a. Oh, thank you. I don't think I'm the top. I'm a work in progress, like all of us. And I'm just hoping that as I get better with about things, I can share a lot of my learnings with you. I think that's way more important to me about that. Please do regular live streams. Okay, 3 more minutes. Let me see if I can knock out a few more. So there was an interesting question about the future of hydrogen. I might actually talk about this in my Patreon and not here. And so in Australia, so for my renewable energy series, the first video was actually meant to be on hydrogen, but it was getting a little bit speculative. But if you are interested in the future of hydrogen, Australia actually has a technology roadmap that actually documents what they plan to do and how they plan to execute against to use hydrogen as a form of energy. Now, in short, if I had to summarize, part of the drive behind hydrogen is that actually, I'm not going to say it. So I think it's better if you read it, because I'm going to get into the speculation zone. Oh, sorry. Hi, Jesse. Where do you see Disney in 5 years? How would Disney Plus compare to? So for me, one of the biggest reasons why I love, I kept adding to Disney is that they own all of our favorite content. Like if we want to talk about the strength of content library, there is no way that you can tell me that Disney don't have a stronger content library than anyone on earth, like than any other company on earth. Like they own Marvel. The only character they're missing in Marvel is Spider-Man, and I think that's owned by Sony. And their own Marvel, the amount of characters inside, that will keep me entertained like probably for the rest of my life. Not to mention all of our favorite Disney, like old school OG kind of content, and some of the new stuff that they have with Star Wars, etc. How does that compare to Netflix? I think the demographic is actually a little bit different, where Disney is a lot more on the family friendly oriented side. They still got to work on maybe the adult side of things. I don't even know if they're going to work on that, but Netflix have that original content, cinematics, where maybe not so much family friendly, but more towards the mature side. So kind of like two different markets, and I think that there's room for both. But for Disney, I'm just so happy that it's one of the companies that I do own, especially if you imagine that people are going back, to theme parks, and and they did mention that I think they are moving towards e-commerce with some of the shops stuff as well. So, so that's good. So yeah, so that's my thoughts around that. Oh, geez, there's a lot. So consider putting your knowledge into an online course. Quite a few people asked about online courses, and yeah, I don't know. Like, I feel like personal finance, like education, should be free, should be absolutely free. Majority of it, because I feel like our education system kind of cheated us in the beginning, of not providing kind of any personal finance education, and I'm doing my part to kind of contribute. And I just don't feel comfortable kind of like making a course and charging for it. I think if I was gonna do it, I think it will be my contribution to our world. Yeah, that's what I'm trying to get at. Are you self-taught, or do you undertake courses? Well, my background is in finance and economics. So in a way, I'm not self-taught. I'm taught by uni. But in uni, the way we were taught is it wasn't really about personal finance. Like it wasn't about like how to build wealth, like that kind of thing. It was more like, okay, we have a portfolio of stocks, and then like calculate the Sharpe ratio and the efficient frontier for a basket of companies at a given adjusted risk. You have the optimal return. We're more trained to talk, like we're more trained to make other people rich, not make ourselves rich. So on the personal finance side, yeah, I'm probably more self-taught. And is there certain courses I took? Well, I just read a lot. I read a lot. I watched a lot of videos, and that's how I learned. Against conventional wisdom, I actually don't think Intelligent Investor is a good book to start off. I know a lot of people. You guys probably gonna give me a thumbs down on that, but I think for early stage for beginner investors, that book is too dense, and you kind of just give up. Before you even get through it. I think the most important thing, especially when it comes to starting out your investing journey, is that you want to take baby steps. And baby steps could mean rich dad, poor dad, understanding how balance sheets work, how cash flow statements work. A lot of these basic things you want to build on top, and then you kind of as you get more mature, then kind of get into the intelligent investor stuff. Because when you start off, like, this is a problem with building habits, that when you start off too difficult, you're not incentivized, and you don't feel like you want to keep going. So you want to cheat the psychological part a little bit, at least the mental part a little bit more, to kind of get yourself into the habit of investing. So I'm more towards self-taught, and I didn't really take any courses, to be honest. I just read a lot of books, and most of the books that I love are in my description. I'll do one more, and then I'll wrap up for the day. Thank you guys. You guys are very, very generous with your comments. Thank you. Yeah, if you got more questions, yeah, just let me know in the comment section. Question on Hack. I think Hack is a subsec. Yeah, mostly the subset companies. I actually spoke quite a bit about this earlier in the stream, so probably like move forward. And if you are, if you watched this far, thank you. I really appreciate it. I think, I'll wrap up on this comment. I think cybersecurity, if companies are not thinking about it, they'll definitely be freaking out somewhat at this point. And but the challenge with this is that, are we, at what valuation, at what price? in my conversation with Rajiv. So in my conversation with Rajiv, man, he's so like he's such a great institutional, at least in my opinion. When I spoke to him, the way that he structured his process, he's just such a great person to learn from. And I think, I know that the tailwind is here, where the cybersecurity, like for cybersec, it's important. They have to think about it, but at what price? In the video with Rajiv, he actually talks about his process where it's product, team, and price. And when you kind of have that three elements that you structure it like that, then it kind of helps you filter out that, even though they have a great product, they have a great team, you can't blindly, buy at whatever price, because even at a great team, great product, it could still be a crappy, investment at an exorbitant price, right? So you have to figure that out, what that means for you. And there's still so many questions. Your hair's getting a little messy, man's for a trim. Yeah, probably. Look, thank you guys so much. I had such a great time here. If you guys do want to make this more of a regular thing, make sure you put your questions in the chat box, and make sure, subscribe to the channel, or gently smash the like button. And if enough people likes the video, I'll make this a regular thing. Okay. Thank you so much. I appreciate it. Thank you so much. I'll see you guys next time.